Hello and welcome, ladies and gentlemen, to another one of my Facebook Live videos. So today we are talking about fixed versus hourly pricing for accountants. So I apologize for the light being a little bit bad, but it's been raining for the last couple of days here in Gauteng. It's been really a blessing for us here as well. So we don't want to complain about the rain, but that means the light's not that great. So I hope you guys can see me well enough. And let me just begin with the intro of what we do here at BuzzNet Direct. So we help accountants to scale their practices. So we especially help accountants who are struggling with marketing and sales to get more of a constant stream of new clients. So that's what we specialize in. And we do videos like this once a week to give a little bit more value to accountants and give our opinions on certain subjects. Like today, we're talking about fixed versus hourly pricing. So this has been a debate recently in the accounting industry about, which is better. Should you go to fixed? Should you stay with hourly pricing? Most accountants are trained on you should charge this much per hour, or you should do hourly pricing for most of your services. And now the industry is going into sort of a change where people are discussing, well, isn't fixed pricing a little bit better? So I just want to have a quick breakdown today about what I think about fixed and hourly pricing and basically just recommend on how we think about pricing overall. So let us start with fixed pricing. So fixed pricing is basically packaging all your services that you offer and you're offering a fixed price for that. So you say, well, we're going to charge 10,000 or 15,000 for this work that we're going to do for you in this period. So the idea here is to basically improve your efficiency, because if you can do 10,000 Rand worth of work basically in 1 hour or 2 hours, then you make a lot more profit. So we're going to go a little bit more into the pros. So that means there's a big incentive to improve efficiency. So that means getting the work done and obviously getting results for that, but as fast as possible. So that's the idea, to improve efficiency. Then if you improve your efficiency, that means you can make a lot more money for a lot less work, because as long as the value that you offer is still there for your clients and they say, yes, I want this value from you, that means that it doesn't matter how long it takes you. So it doesn't matter how long you work on something, as long as you get the results and you provide the value, it doesn't matter how long it takes. So basically, as long as the value is there and you can communicate that value to your clients, that will be great. So the thing about accountants is they really struggle with that last point. They really struggle with communicating the value to the client, because they think about their services as just services. They don't think of it as a ROI service that provides value, provides return on investment for their clients. So as soon as you make that mental shift and start thinking about, okay, great, we can start thinking about our services as a return on investment service, that means it's a lot easier to communicate that value to them. But there's obviously cons for fixed pricing as well. So if you think about, you talk with your client and you go through everything, you think, okay, great, this is what I'm going to have to do, this is the scope for the business. But then suddenly a few weeks down the line, you realize they didn't give you all the information. They didn't tell you about everything else that's going to be more work for you. That means, well, you already priced them a fixed price and now you need to do the work. But now the work is a lot more than you thought it was. So that means you can do a lot more work and not get paid for that because you didn't see that in the beginning. So that is a bad that is a bad situation to be in. That means you're doing a lot of work but not getting paid for that. So the other thing is, if you do fixed pricing and you just charge overall just too little, so you don't have high prices. So if you're thinking about, okay, great, fixed pricing is the way to go, I'm going to charge 5,000 for all of my services. But now you're still in the rut of offering 20 services. So now you're offering 5,000 Rand for 20 services. That means you have a lot of work, but you're not getting paid to do that work because you yourself priced too low. So you're charging 5,000 Rand, but now it's taking a week, 2 weeks to complete the work. But you just decided, no, just because I created this package, it means that I should be implementing this package just as is. And the thing is every single business is different. That means that you cannot charge every single business the exact same way. So you cannot do that for every single business. If a business is doing 10 million a year or business is doing 2 million a year, there's a big difference in the amount of work that you're going to have to do for them. So you cannot charge the same services to the bigger company and the smaller company the exact same 5,000. You're going to get overworked and not get paid for your work. Okay, let's move on to hourly pricing. So the problem with, actually, let's start with the pros for hourly pricing. So the pros are you do not need to think about all these intricate details of pricing. You can just say, well, I charge 200 Rand per hour and that's going to be it. Or I charge 500 Rand per hour and this is what we think about how many hours is going to be, but we'll charge you in the end. But the thing is about this is, well, one, the clients don't like this because they don't really know how much it's going to cost them. And you just, well, great, you just charge per hour. That means there's no incentive at all to improve your efficiency. That means it's very hard to motivate your employees as well, because the more work you do, the more you get paid. So the longer you take with something, the more reward there's going to be for, not being efficient, because it's still going to be more billable hours at the end of the day. So that's the thing. If you're not very efficient, and that means you're going to get paid more, and that's a pro at the end of the day. But clients do not like this. You do not want to do this, and it also creates a bad culture in your company if everybody is just trying to take as long as possible to do something, because it's going to create more billable hours. So actually I did both pros and cons there at the same time. But the thing is hourly pricing, it's not all bad and it's not all good either, because a lot of people just learned, no, this is how accountants do work and this is how everything works. The thing is it's really not like that. So let's go a little bit more into our recommendations. So if you're thinking about everything that I said here and you think about, okay, well, great, now we see there's pros and cons to both. Well, the obvious solution is just combine them. That means I am a big advocate for pricing according to value and pricing according to fixed prices. But those fixed prices need to be very high prices, and it needs to be, you shouldn't know the price before you go into the strategy session, sitting down with the client, analyzing his business. You should not know the pricing beforehand, because you need to analyze the business first and figure out the scope, figure out how much work is going to be, price each service individually, and then eventually come up with a fixed price for all your services. But then what you want to be doing is you shouldn't just be stubborn and stuck with that price. You tell your clients, well, because we don't really know the full extent of the scope, we just want to qualify and just tell you after a month or after a few weeks of work, we're going to come back to you and see if we need to charge more, And or you can just tell them, well, if we run over the retainer that we gave you of 10,000 and it's going to take us more, then after that, we're going to charge hourly. That means you start off with your fixed prices and then you just qualify and tell them, well, if we go over this, we're going to charge you hourly, because there's a lot of clients that are not going to give you all the information up front, or you're not going to know the scope of everything that you need to be doing, or how bad the cleanup's going to be, all that sort of stuff, how difficult the work's going to be. So that's what you do. You start off with a fixed price, and then you charge hourly if you go over that. That means this creates that thing that you're not going to get burned when you're charging out, or when you're charging fixed, because then you're not going to do all that work for free, basically, because you didn't have all the information from the start. So that's what we really try to advocate for, is start off with fixed pricing, then qualify and do hourly if you go over that extent. But everything that you price should be according to value, and you should be thinking about, it should be a return on investment service that you provide. So it should not only be the profit margins that you increase, the saved cost or the saved taxes. It could include time saved, anxiety saved, stress relief, and basically just improved living standards or just peace of mind. All that could be included in your return on investment, because that creates value for your clients. You need to be starting to calculate that while you're sitting with the client, seeing how much everything is going to be of value for him, and then charge according to 3 times return on investment. That means you're charging 60, you're charging 20. If it's 60,000 rands value, you're charging 20% of basically a third of that. So that's we're actually running out of time here. Thank you everybody for listening to this. I really want to start a discussion about this. Tell us what you think about, what's your opinion on fixed versus hourly prices. Thank you everybody, and enjoy the rest of your week.